Now, with many of the world's leading financial states deeply submerged in debt, developing economies are taking centre stage, signalling big changes in the world of finance. RT's business presenter, Katie Pilbeam, now looks at how emerging markets are surpassing developed nations.
Developing countries now account for over half of the world's economy, and with this growth comes power. So which nations are we talking about then? Well, if we look at this map, we can see that the developing world is overtaking the developed world. And if we wind the clock back, we can see that back in 1982, the developed world accounted for 69% of the world economy, while the developing world took up just a third. Fast forward more than 30 years, the emerging economies will make up nearly 3/4 of the world economy by 2017. So, is this economic shift changing the balance of power? I asked legendary investor Jim Rogers exactly that.
We're already seeing it. It's not just the size of the world economy. The creditor nations are the new nations as well. Historically, people like Great Britain, America, financed developing nations so that they could grow. But now it's the developing nations which have the money. Developed, I don't know if you've been to Asia, if you've been to Hong Kong or Singapore or Korea or some of the places, the standards of living in many of these places are much better than America right now. Fly to JFK in New York and you'll realize you're in a third world airport. Fly to Singapore airport and you'll realize you're in a first world airport. It's already happening, Katie.
So from the sounds of it, these so-called developing countries don't need to develop anymore. Maybe it's the countries which have held the purse strings for so long who could now do with a little maintenance.